The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon. And of course, 877-927-6648 is the number to call. And great shows. Oh, we started the show at TFN, 7 o'clock on a Tuesday, 7 o'clock in the morning. That's Nico and Paige. Great show. Wow, I'm always amazed at how much information, how much knowledge, how much research they've done. What a fabulous show. Just try it Tuesday. I believe it's Tuesday and Thursday, 7 o'clock in the morning. And 2 hours instead of the 1 hour they used to have. And I have to tell you, you're gonna be educated about health. And it's just a great show. Congratulations to them both. So Dow's down 9 at 70,139. S&P's up 2.5 at 2015. Comp index is up 7 at 49.10. You've got the trend up at 170. Trend actually went to an overbought level today, which suggests that there could be another big bounce in the next day or so. Just very interesting what's going on here. We'll talk about it as we move along. The VIX index is down at 20.37, down 33. I want to see it in the 18s, and then we got a little safe riding just for the moment. I believe that the forces that are changing the monthly charts to negative, some of the very best of the best, starting to get sell modes in the daily, pretty close to sell signal in the weekly, watching those monthlies really closely. So that says to me that the upside is still very limited, but there is some upside, and we'll go through that. Let me just finish all the numbers first. E-minis just down 1 3/4 at 2007. Look at that double, that test of the low. Didn't close under 1983.25. Did go to 1980.25 yesterday in a leg D, which is probably a trough D if there's no new low today. And that weekly chart, I'm looking at it and I'm saying, hey, for all the turmoil that's going on and for all the emails I get about crashes and sell signals and very little about the upside, I'm saying to myself, there's just enough residual strength to hold out a little longer. But in the meantime, I'm starting to see more potential shorts than longs. And that's saying to me my bias has to be weighted a little bit more towards the negative side as it was recently. Now, then it went to the long side. Now I have to start going back to more shorts. But I am seeing some positions on the long side that we have that are holding very well. And that says to me we've still got a bifurcated market with a tendency more towards 60-40, with 60% now on the sell side. I'm beginning to see some signs, and just there are some signs of strength in former very weak areas. Now, here's something that's very important. I'm going to go to the dollar before I go to gold. Look, the dollar is at this particular point, it is up 71 cents at 99.58. That is huge. And I have to feel that I have to think that I have to put my sentiments aside and say that we've seen historically there is a correlation. How can I put that? There is a correlation of trend for a while, and that's not to talk about cause or effect. That's just to say the result is that we've seen the Dow and the dollar, let's call it the general market and the dollar, trend towards the same direction for a long time. And that's saying to me that there's just a chance that there's a little more room to the upside. Maybe we don't make the all-time high in the Dow, as I've been anticipating that the dollar took 7, 8 months before it went back to make that squeak of 11 cents to a new recovery high for leg C in the monthly chart. And I have to look at this and say, you know what? This is just a massive leg B in the 120-minute chart. This is a massive leg B in the daily chart. This is strength. Now, how does it affect the market? Because you've got some multinationals here that might be impacted negatively. We'll see about that. But in the meantime, back at the ranch, this is fantastic action in the dollar. I wouldn't call it breakout action, but certainly on a near-term basis, it's breakout action. And as far as I'm looking at a market, I think that you really have to be selective on the long side, selective on the short side. Don't be afraid to take something on the long side, even though the market's in this wishy-washy phase. The Chapman wave trend gauge actually did work. We had the call yesterday, and we were discussing the trend. White was not reflecting any of the massive, almost 500-point down move yesterday. Well, today it did. It went slightly higher, and we've got a Chapman wave trend gauge suggesting that it could even recur today because it's already happened this morning. The indicator did. So after that, you've got about 2 days in which it should work. So I'm really watching that closely. So now let's look at gold, because gold should be down sharply, and it's not. It's holding. Gold is up. The dollar is up. But the bonds now are not up. Earlier on, the bonds were up. So the TLT is at 120.93, down 52. That's the 20-year T-bond fund. Gold is up $1.40 at 10.76. Holding quite nice. You see this little pattern here, this little cluster pattern. That can mean something. But you've got to have price movement. You can't just keep going flat on the sideways within a trading band and have the technicals try to improve, and then they do slightly improve, and yet you don't get any price movement in gold. Gold should have done yesterday. I told you yesterday I was disappointed in gold having, not personally because we don't have any positions, but just in terms of the relationship of the market to gold. Gold should have been up $28 to $35, should have closed towards the $32 area, and today should be up again about another $15. So I don't think I'm liking what I see so much in gold. I went through a whole bunch of gold stocks earlier on. It's a mixed picture there, with the majority of them not doing all that well today, and a couple actually rallying, but they are real tiny ones mostly that are rallying. Let me just take my favorite ASA. ASA is up, a penny. At $7.28, not really showing very much strength. And GG is Gold Core, down 28 cents. Let me go to RGLD, because that, of course, is they get residuals. It's a royalty company. Royal Gold trading at RGLD, trading at 36.25, down 93 cents. I just don't see it. I just don't see anything yet. Maybe I'm wrong. Keep getting emails about that as well. So I don't know what to tell you. All I can say is that selectivity is the name of the game here. If you want to be able to play when the market really starts to take off downside or take off on the upside, keep a hoard of cash ready, because you want to be putting that to work at some point. Right now, it's no big deal to be a little bit light. And let's go on. We want to look at the EUR-USD. That's the euro currency pair. Whoa. Smashing to the downside, 1.0727, down 0.010. I say smash only in terms of chart pattern. It's not down that much in terms of the weekly chart, but it is an ugly looking pattern now that it's started to plunge. Now, the other thing that I want you to say, we're having a break coming up right now. The Dow's down 48, the S&P's down $1.20, and I'll be right back. And we want to look at the VIX index. We want to look at a couple of other things as well. Be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. I'm just finishing off a chart here with the Chapman Wave left side, right side price time match. Let me just draw the Chapman Wave trend line right there, inside wedge. Okay, so the question was, let me see, was it Mike? I believe it was Mike. Let me just go back and see. That was Mike. Can you please look at pot? That's potash, core, Saskatchewan, potash, other minerals they have in their arsenal. And let's see, the question is, did I just lose the question? Do it again. What happened to it? Good morning. Yep. What are your parameters? Okay. I see nothing in the way of strength in the monthly chart. There's made a left side price, right side price time match, which actually goes to February. And we're in January, and the price that it has to hold is $15.85. The low so far has been, let me just double check, was the low of the week of the 18th of December at 1665. We've gone to 1677. We're testing it. So this is what I need to look at here. For this to succeed, let me show you a chart right here. This is the E-mini. The E-mini from last night after the close. There was a low of 1992.25 on the 10-minute. Then it made the same kind of arch formation, but it did not come down and retest the 1992.25 level. It went to 1993.75. That 1993.75 said if there is a move, and that happened early this morning, in fact, is when I was sending out the email, the E-mini, this chart right here. This chart, right, I lost it. It is the daily and the 120-minute chart that I was showing of the E-mini, and I was talking about the upside potential. So what happened is it immediately started to rally. And it rallied and rallied and rallied. It went to a peak F, where it went to a left side, right side price time match to 213.75. That was the high that was made at 20 to 2 on the 5th, what's today? Oh, this morning, 22 this morning. Came all the way down from 2013 to 1992, ran all the way back to today's high so far, which is 2013, that was made at 20 to 10. And that was a peak F with the trend line I'd already drawn in. and then it came back down. It held support. It went left side, right side, but it smashed through that support. It held it for a moment, and then it took it right out. And that says if you take it out and you can't bounce back and close within the left side support level, you got to watch out for further decline. And it did that. So this is a very important pattern, this lowercase h that has a retest, a successful retest. That would say to me that the low that was made back around the 14th of December, with a rally that went to peak B, I'm calling it a B. I'm still calling it a B right now. It hasn't been taken out. On the 23rd of December 1865. So from the low, it's a big rally from 1665, I would say, to 1865. That's 2 points. It's over, it's about 12%. What it it's given back everything. And the MACD has a lot of room to go down. If it holds here and starts to rally, that's a good sign. But it also says, if the MACD, which is just -1, it's just still, it's just a fraction negative. If it starts to see the green, the fast-moving average, decline quickly over the slow-moving average, and the stochastic, which is a 30.58, could still go back to the teens, that's a lot of room for potash. And I'm going to have to say that the dollar strength and the commodity index, the commodities in general, and that includes gold, still acting so weak in terms of the relationship of strength in the dollar impacting many of the commodities. I have to put that into the package, and I have to say, look, here's in the Chapman wave methodology, my CD introducing the Chapman wave methodology, I talk about the H pattern. We used to call it the dreaded H. I still like to call it the dreaded H, but one of the reasons is that if it takes out that left side low, it's an H. If you thought you were bullish, you are wrong, because if it takes it out and doesn't close above it within 1 bar, 2 maximum, and keeps going down, it could have a 1-to-1 to the downside, just like all these other H's have done. So you've got to be really careful here. So all I'm saying, Mike, is be careful, because I don't see anything worth even nibbling on right now. But if 1665 holds in the next 3 days without being taken out, or it spikes below, but it closes at 1680, so it closes above it, that's one step to say, be careful, but it might be a good sign. The best sign is that if the dollar suddenly, I don't know how it's going to do that, because the dollar looks very strong here. If the dollar just at 99.62, I don't know what it's going to take to get down to below the low bar of 97.81 made in the 20th of December. If it takes that out, you will see gold move higher and the commodity should have a bounce. Just make it real simple. Could be wrong, but I'm trying to make it simple, and I believe that's the way to look at it. So hopefully that's a big help. Nothing yet. Now, the big question, of course, is, well, does that mean that I could short? You know, it's so difficult to short when you are moments away, and I blink away from key support. I mean, what if I say yes, and then it goes, tests 1665 successfully, or doesn't even get there, has a pretty darn good bounce, and that bounce goes from 1683, where it is now, to 1782. That's already an 8% bounce. I would much rather say I want the bounce first, and then I will be prepared in an M-shaped pattern to short. So risk reward, if you're thinking, okay, dollar's very strong, potash doesn't have any support, any of those other commodities, I think it's going to go lower, then I would say to you, okay, then you could start a position, but that's just like a baby starter position, because your real position is going to come a little later. That's the way I would look at it. So answer is, if you want to short, you can short here, but it's like the basic starter position. The real position has to be on a bounce, maybe to 1770. And if it starts to roll over from there, you could add to that short position. But this is where you've got the highest risk reward, because if it smashes through, this could easily, you can see based on the monthly chart, start to go to the 1530, 1480 level. That would be a really nice percentage to the downside. So my bias is to say that this is very weak. My bias is to say that if you are going to do anything at all, rather than take a nibble on the long side, because of the strength of the dollar, I'd prefer to just nibble on the short side, and that'll give you a lot of information. Okay, so that's that. I hope that helped you. And next question was, I'm just running back here. PG. Was that the next question? Yeah, PG, Procter & Gamble. So now the dollar's moving higher. What's Procter & Gamble doing? It had made a peak D top. Let me put a down arrow here because I always have to wait for certain conditions to be met. Now they're met. So the Procter & Gamble on the daily basis is actually in a sell signal, just about to say sell mode. We must wait for the close today. But that doesn't mean to say it couldn't bounce. Now, the reason why I'm saying that it's on the daily basis, because even though the technicals are weak, it's above the 200-period exponential moving average, so my eye moves over to the right, and I'm looking at Procter & Gamble weekly, PG, trading at 78.45, up 8 cents, and that's a peak C with the MACD still good, stochastic at 82%. So I wouldn't base my stuff yet on the weekly, on the daily. I'd be thinking more of the weekly and the monthly. So we'll get back to that, and there's some other questions that I had. We'll see if there are any emails, and we'll see if there are any callers coming in. Basil Chapman, Tiger Technicians Hour, Dow's down 48.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So we're looking at Procter & Gamble, and what I'm saying is that I think as a dividend stock, and even with the dollar rallying like this, the technicals in the weekly chart are really quite good. Not so much the monthly, but the price has been very good in the monthly. I'm inclined to stay in it if you're long, using it as a dividend play with a potential for capital gain. I'd get a little cautious at 78.49. give me a yell when it goes under 76.60, and then I'll have to make some kind of decision to say it could be a peak C1, C2 right there. So far, all I'm saying is that I think it's in a trading band. The trading band's between the 77s, 77.30, I should say, and maybe working its way towards at 78.50, working its way towards 79.20 is the 9-period daily moving average. But I wouldn't be surprised if it works its way to 79. I don't mind if it stays in this area right here between the low 77s and the mid 80s. Mid 80 meaning a mid 80 0.50 to 0.70. It doesn't bother me at all. That would be fine. If it pulls back a little bit more, then I'm saying, okay, watch out, because the dividend might not be worth it if it's going to break into the 74s again. That's going to be too much for me. So, okay. Basil, can you look at LVS and Win? Well, I just looked at, LVS and Win. That's the next question. Okay. So, wait. Did I skip a question here? So we did PG. The next thing I wanted to do was, LVS. Okay. So LVS is acting very well. It's at 44.30, up 90 cents right now. Horrible monthly chart. Chart went from a high of March of 2014. It hits 88.28. Has a little problem. It comes back down, drops down in October to 36.53. I would say that it's more than a 50% decline. But what's really interesting is that it has a pop-up to the 9-period moving average for yet again. It keeps trying to do that, gets repelled, and now it's just showing a little bit of stability, and the 9-period moving average is about to cross negative below the 200-period exponential moving average in the monthly chart. And that always suggests that right here you could see a slight change of trend before it continues in the downtrend. So that slight change of trend, I would put it at this in this situation. I'd say at 44.24. Yesterday's reversal and today's big move up says that it was pushed down arbitrarily yesterday. It didn't deserve it, and now it's trying to get back to make leg D. So this is a very important point, because if it breaks out, it's 44.23 right now. 43.73 is the 9-period moving average. If it takes out 43.20 to 42.80 support area, that's going to be tough. That's going to give you that arch formation in the daily and say, the weekly's fading. As it stands right now, it looks to me that in this environment, people are looking for something different, something that is not an interest rate play, something that's not really a market play per se. It's more a different category. I don't think intermediate term that this is a great looking stock. In a shorter term perspective, I think it can actually go to the 46s. So 44.24 to 46 is very nice. So how it takes out, if it does, 45 round number high of the 29th of December is important. If it takes it out and it closes in the 45.30s, I think it's going high to tackle the next series of high bars. That would be 45.25 of the 9th of December and the high of the 2nd of December all the way to 46.22. My bias, favorable right now. In the shorter term, intermediate term, is just stuck in a trading band. I wouldn't get too excited. But I would say 5%, 6% in this market, not a bad deal if you can get it. I don't want to do them both. I'm just going to put it up here just to look for my own satisfaction. Actually, Win. Yeah. I think LVS on a shorter term basis is a better chart. Okay. So out of the two of them, now we're going to move down the list here. We spoke about POT. BXLT trying for a breakout of the high, not a question for me. Yes, but pot expensive in Canada and looking for it to bottom. Love it long term. I'm trying to accumulate. Mike, if you're going to accumulate potash, let me do this. I would make a suggestion that says catching a falling knife is fine. I don't want to average down. I would prefer to average up. That's number one. I'm not too big on averaging. I try my best to do it, but it's averaging up that works much better than averaging down. Number one. Number two is any position, meaning that if you already have a position, you're underwater in that position. I would either do the little nibbling that I was talking about just a moment ago. Nibbling, that was to the short side. You're trying to go long. I'd have to wait. Why don't you give me a call? What's today? Tuesday. Give me a call towards Thursday or Friday, preferably Friday on Technical Friday. Why? Because we'll be able to see by then whether or not it's broken the $16.65 support. If it's taken it out and holding under it, and the second bar is ugly, I don't want any part of it for now. I might get a buy signal any day after that, but boy, you are vulnerable to further downside activity. And this weekly chart says every one of these rallies should have worked, and they've failed. So this is one of those multi-decade down moves. So potash has to do something. Something fabulous has to happen, and I'd much rather be buying slightly higher highs and slightly higher lows, looking for some reversal of the trend. This is the first start of the trend right here, and that's why I'm saying it's going to be very important. So give me a call in a few days. We'll talk about building, because if you're doing the fundamental work and you're looking at something very positive, then I can try to help you build that position. But boy, this is long-term chart says we are testing within 30 cents or something of the very long-term left side low. That's tough. I don't want to see that break. Okay, next question is, there's LVS. I just did LVS. Yeah, and the Den says, I had a question sometime. VBR. Okay, I just want to do this right now because I've had some emails about it. Just real quickly, VBR is the Vanguard Small Cap Value ETF. It's trading at 97.32. Not a great chart. Another one of those H patterns. And I wanted to put up J and K as we are going out to go to our first call. And let me just do this. Junk JNK. This is the Spider Barclays High Yield Bond Fund ETF. This better holds. This is the same thing. It better hold support, because if it doesn't, J&K is going to look like a piece of junk, and it better rally soon to at least have some veracity in this chart pattern, trying to get from 33.73 to 34.45. Let's go to George in New York. George, how are you?
Basil, good morning. Happy New Year to you.
Happy New Year to you. Yes.
Basil, today I wanted to look at CMG.
All right. Chipotle Mexican Grill trading at $449.81. I have to tell you, folks, you haven't heard this for a very long time. It is up $1, $1. Yes, George, what are you looking at?
Well, absolutely nothing at this point. I'm only doing an analysis on it. But based on my analysis, and that's reducing the earnings on Chipotle going forward.
So, George, unless I'm mistaken, I don't think I've seen anyone doing a kind of a cost analysis on looking out. They're kind of using figures that, in a way, they're kind of making up on the fly. I don't know how they're going to do it. I'm told by people. My son told me in New York, he just he's going around. He sees some of them almost empty Chipotle. He's never seen this before. So I'm interested in what you're going to say. So give me a second. We've got a break coming up, and then we'll talk about it. Dow's down 38, S&P's unchanged. It's actually up 57 cents. We'll be back with George in New York talking about CMG.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, so this George, we're going to be back with you in 1 second. I just had a couple of questions, and I know that I always run out of time because I want to hear what you say. I just wanted to say that the question in the den about Apple's trying to rally. It's kind of failed. It's down. It's at 104.08. 106.72 is the 9-period moving average. If it can't get over that in the next 2 days, there's just no way it's going to try to get to the 9-period moving average of 110 and hold above there to kind of save the day. It's got an H pattern. That H pattern looks quite formidable. It looks like, I've said this for a long time, the moment Apple starts trading under 100, the upside is really limited. So that's Apple. And the other question I had from Dan is about Netflix. We'll try to get to that with a chart a little later on. I want to go through the CMG with George, but first I want to say CMG has a characteristic. I'm not sure about the alternate count here in the weekly. I've got it as a C. It could be something else, but it is a leg D in the weekly and monthly, and that monthly is going to be a big negative if it's trading at 107 down to, if it starts to trade under 98 anytime in the next week and a half, I would have to put it into the category of on my watch list for a hat trick top in Netflix. If that's the case, I have to start looking at the market as being in a deeper corrective mode, and we'll be talking about that. I'll try to get to it in a moment, but I want to go through this with George. George, yes. So tell me about CMG.
All right. This is all preliminary, Basil. So right now it's very preliminary on CMG. So what I did was, of course, while it's dropping, I wanted to do an analysis on this company. And with that said, based on my analysis, if I'm correct, I have a margin of safety, meaning a place where I would like to initiate a position, hypothetically, would be around 272. So based on that,
wait. Let me just put that in for anybody just listening and who's not got the chart in front of them. We're talking about one of the very best stocks in the stock market for the last number of years, certainly from late 2012, going from the 233s all the way to the most recent high, and the most recent high was 758.61, made a round number low 685 at the opening of that month of August. Now, what's really important about this is that you've got a little double top, and that double top took out the most important lows that were made at 590, around about 598 in June. And we've got a one-to-one to the downside having pierced, and the month is not yet over. So this is talking about up until today, of just 2 days of trading. We've taken out the low of 472. That was the April low that was started the next big move up in Chipotle. Now, I just wanted to add 2 things. One is This is a company that did everything right. I don't think I've heard anyone who's eaten there who hasn't said if they do kind of like that food that they haven't loved it and they want to go back. I saw people interviewed outside Chipotle saying, oh, we live on it, we love it, we're missing it. So if they get this right, and I said right away, I said they've got to do something very different, because to just say they've cleaned it up and then have repeat episodes. You remember it was here in Boston that the Boston College kids had, it was 85, and then it was 158 students that had terrible problems after eating there. So there has to be something completely different, and it has to be proven for a couple of months, I'd say at least 2 months, of not a single incident, because that's the only way they can get a clear name, because they had a name recognition that you've seen it rarely. You've seen it in Apple, you've seen it in Tesla for a long time. You've only seen it in a couple of products where the name gave panache, gave a sense of authority of being the leader, and now that's changed. Yes, go on.
Correct. All right. Well, based on all of that, which I'm in total agreement with you, and that's why I decided to take the time to do the research on it. One, of course, is its cash position, its current assets to its liabilities are, without a doubt, it's great. It's over 4-to-1. So we know they have cash. We know they have no debt. So with that, we take it a step further. We see how the growth was last 10 years. The earnings per share growth last 10 years have been just double digits.
Correct.
Earnings per share last 10 years have been 29.55%. But now we have a problem like Merck had with Viacom.
Well, and we should mention that in this business, that kind of consistent percentage is really impressive.
Absolutely correct. And most of all, to me, I look at is always the balance sheets. And I always look at, besides a lot of indicators that I look at, like you do on technical analysis, I do as well on fundamental analysis.
Okay.
So there's other parameters I'm looking at as well. But most of all, I always like a healthy balance sheet, because you could weather a downturn. But here's the thing. With that said, I have to project where their future price is, where I would like to buy it on sale. Based on that, I'm cutting their earnings by 50% going forward. So I discount it to the future, and that's how I come up with a 272 number.
Okay, but that is halving it. That's almost halving it from where we are right now. That's not even from the very top.
Yes, I realize all of that. But do take into account that at the height of 758 and in the lows at the 500s, this stock was overvalued to begin with.
Yes.
Based on its earnings per share growth. So with that said, we already have an overvalued company.
Okay, very good. Yes.
You follow that so far?
Yes, right.
Because they're well, I don't have what their current PE would have been at the 700, but it would have been very high.
Yeah, I heard estimates, and they were really high. They definitely were very high.
Exactly, which to me it's just overvalued based on that. So with that, of course, we have to do what we call a discounted cash flow analysis. And on that, this is how we come up with the 272 number.
Okay, so the 272 number is between the 442 high that was made back in back in April of 2012. 442 was the high, and then the low was 233 in October. It had about a 6 months, 7-month corrective period, and that has got a trend line. And that trend line says that if let's call it 400. If 400 is taken out, by Chipotle, certainly if it's taken out sooner rather than later, but if it comes in under that level and closes under that level in, I would say, by February, then I'm with you in that. But I think there's going to be a good bounce. You know what? Give me a second here, and I'll give you numbers. You give me numbers, and we'll wrap it up as soon as we come back. We've got a few minutes left. So we've got a break coming up, folks. The Dow's now only down 34. S&P's up 1. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So, folks, this is what we've got. We've got Chipotle. We're looking at. It's up $1.19. It's at $4.50. It made a high, an all-time high. What? I forgot to type that in. Of $458.61, $457 double top in October.
On August 5th.
And what we're looking at right now is a situation that has gone down for 1, 2, 3. This is the fourth month, and of course the month has only started. It's only 2 days, but it's the fourth month that it's actually just seen red candles and it's plummeted, and very bad news there with the different problems that they have at the restaurants, whether it's from, I don't think they've actually pinpointed it. This is the big disappointment. They haven't pinpointed
it yet.
Well, no, but one of the things, as my wife was explaining, one of the things that they've got is what you get on board a ship, where it's by touch, it's it's carried that way, and that's very different altogether. So we're talking about maybe two different things impacting it. So they have to get to the nitty-gritties of what's going on here. That's number one. Number two is, I do see the trend line says that we're very close to at least a bounce, but they're only going to be until something is resolved. And then it's proven over a period of weeks and maybe months. I don't think it'll take a long time to get those restaurants as full as they were. In the meantime, they've got the costs, they've got the personnel, they've got everything. They can't look bad. They can't do a single. It's like the Boston Globe right now, changing delivery. I had a guy who delivered it no matter what the weather was like. He was fantastic. He delivered in 6:30 in the morning or 6 o'clock. It was already there. They changed to a new service. They're having the most terrible problems. So those things, it takes a little while to build the trust back again. So, okay. So what I'm looking at is, I don't think you've got anything to even look at in terms of the positions that you like to buy when you see value. I think you will start to see value. Yeah, you'll see value over a period of time, and that time has to do not just with price, but it has to do with how the whole 410, maybe 411 to 392 area. 397 is really the area that would be really key. You start to close under that, you go to the 388 area, and it's kind of open territory below. So how about we talk about the rest of it? Maybe let's give it a couple of weeks before we go back to CMG and see what's happening.
No, absolutely. This is all premature. The only thing I am saying is we shouldn't discount it as a bad company, because it's a very good company, but as I was saying, it would be very good to get it on sale. Correct,
absolutely. And not only that, it's how they deal with what's going on. I don't think they've dealt with it really well up until now. So we'll talk about that, but I think I'm keeping it on my eye because I want to see how reparations are made and how companies can. We've seen it over the years. Remember, what was that, the Tylenol scare? We've seen it over the years where something terrible has happened. Took a long time to repair. And when it was repaired, it became a stronger company. Hey, thanks. I appreciate that, George. Happy New Year. We'll talk again.
Basil, Happy New Year, and Happy New Year to everybody as well.
Thank you very much. Everyone appreciates that. So, folks, let's do this. We're going to go back to the Dow. This is really important. I'll tell you why. The rally that we had late yesterday was part of what we look at in the Chapman Wave trend gauge. What happened today, I said to subscribers, I would like to see a scary sell-off and then a recovery. Instead, what we had is the scary sell-off and recovery, but it was pre-market. That was disappointing to me. And then we got a nice rally, a nice rally in the S&P, 7 points or so. And then the market gave it back. And now it's struggling. I'm making it real simple. This trend line that you're looking at right here in the weekly matches that trend line. Time-wise, we should still have at least another couple of weeks even before we break down and go into the 16,800s. I'm watching this real closely. Watch the levels. A close below yesterday's low of 16,957, very negative. Holding here, trying to get to the 17,200s. That's what I'm expecting. We went to 17,195. We need more. Thanks for being here. I'll be back later with Tom O'Brien. Have a great day. Speak to you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.